What's good? What's good? Welcome to another episode of Cheef and Chart. It's your man Don Bucks. You know what I mean? And this is brought to you by Rap and Bill. You know, the home of money conversations. You know, we talk all things black wealth. But as y'all know, with Cheef and Chart, this is one of the solutions that I'm bringing to the table, which is options trading. We talk all things options and charts. So make sure you hit the notification bell and the subscribe button so you know when I'm going live. So this episode is called Nightmare Runtz because that's what I'm about to be chiefing. You guys know, of course, I smoke weed, hence the name Cheef and Chart. I just went to this cannabis festival this past weekend and loaded up. You know, I need them flavors so I can put it in my title. But yeah, this is Nightmare Runtz, man. I think that joint's called Canna Fest. I've never been to a cannabis festival. I will be back. Yo. So this is one of my favorite strains from the day. It's one of the first tables I stopped at. Grabbed a couple things, stepped off, enjoyed the day a little bit, and was like, yo, this one right here is fire. Doubled back and grabbed a few more of these. So that's what we about to be cheaping today. So if y'all was here yesterday, y'all know what's going on the SPY. How low can it go? So today we're going to talk about taking profit and re-entering on strength or re-entering on weakness. I've been talking about this for the past couple of days, maybe a week, called momentum divergence. So that is a key to more consistent trades. Noticing what the momentum indicator is saying on your particular trading time frame, right? And corresponding that with the price action that's going on. So let's get into some charts and get it in right quick. So y'all know what I said was going to happen yesterday. So let's walk through it. Let's walk through it. And this weed tastes good. All right, so boom, the SPY. You know, you got to keep your eye on the SPY and follow my mouse, y'all. So this was yesterday. Each bar represents a day, right? So this bar, you see this line here? This is a support line. So if this was going to hold, it wouldn't have broke through. But how do we know it wasn't going to hold? We see momentum going to the downside. So yesterday, it broke. So what did I say was going to happen today? It's going to fall through. And what's going to happen next is it's going to retest that support level. It's going to retrace back up because that's normal price action. Goes down, retrace up, goes down, retrace up a little bit, goes down. The thing with downtrends, the drawdowns, the red bars are more than the green, right? Hence, you're going to have a downtrend. So with this one, we're going to have a little bit of green pullback, right? It's going to retest this support that is just broken because support, once it's broken, now becomes overhead resistance. So it's going to test this. And that is what, that is a good position to enter into a trend on the retracement. Because what that's going to create is a momentum divergence, which is what happened here. So it fell through. And if y'all was tapped into Cheef and Chart, we talked about this. It fell through, and here's the retracement, the green. So that's what's going to happen here. It's going to retrace, but see, when it retraces, that creates a momentum divergence. This is where you can get in for the continuation down because there's a green bar And here's another one the day before. You could have got it the day before. And down here is a corresponding weakness, a downtrend, downwards momentum. So here's a good position. Once it retraces up, that gives it a higher place to fall from, for one. For two, it gives you a better price because put option contracts become cheaper when prices go up because the put profits when it goes down. It increases in value as it goes down. It decreases in value as it goes up. So when it retraces up, you get a cheaper put option contract and a higher place for it to fall from. So you get better position and better price when you catch a trend in the retracement because that creates a momentum divergence. Okay. And that's what's going on right here with the SPY. So yesterday, I told y'all what was going to happen, and it happened. So now I'm looking for a retracement at some point. So let's go down to the trading time frame because that's where we get surgical with it. And look what we got here. It broke. Because remember, in those daily bars, when you drop down to the 2-hour time frame, that one bar now turns into four bars. So this is that day. This is the whole day. So yeah, it fell through because this was yesterday. Fell through these four. And this is today. So it tried to retrace. Here it go. Here's that strength. It tried. But as you can see here, here's that momentum divergence again in the trading time frame as well. So you have this strength with this corresponding weakness in the momentum indicator down here. So you could have positioned here in this strength and, for the continuation down. So that's what I'm doing. It's because what happened to me in my stock is the same exact thing, but the opposite. Yeah, the opposite effect because the stock that I'm trading is in opposition. It acts just like the SPY, but backwards. So if the SPY is going down, my stock is going up in the same fashion. So here's my stock. So let's go to the daily so I can show y'all how mine was looking the same way as the SPY, but the opposite. So let me draw some lines in here because I thought they would be here, but they're not. So let's draw. All right, so we got a level here. All right. Boom. Boom. I know I look like a mad scientist looking at this screen like this, but it's how y'all gonna look too. It's how you want to look. Okay. Boom. Uh-oh. And look at this. See, you don't have to be exact. Just make sure you include everything you need to include. All right, boom. So here's my levels. Let me draw the one above, and we should be good. Let's see, above. Hold up, yeah. The one above is right here. Boom. Stretch it down. So here we go. Like, how do we know where it's going, Don? Because you got to draw your levels. Draw your levels in the daily, right? So you know where it's ultimately going. Because the older time frame holds precedent, right? So I think this is a level as well, but you can't really see it. So anything you can't really see might not even be worth drawing. So I'm gonna draw it right now for example purposes. Yeah, I think that's a level. I think that's a level. But I think it has the potential to keep going. It's an insignificant level because you can't even really see it, right? If you can't really see it, it's not really worth drawing. The next top I see really is here at 27.90. That's the one I'm going for. So here we go. Yesterday, the 21st. Actually, I've been playing this all week. So let's start here. It shot up through it and it retraced, right? But you see this red bar. First of all, you see this red, the first red bar. Let me make the screen bigger. So y'all can see this. So it shot up right here. When it shot up, it retraced. So it broke and it retraced right here onto this support level. See how this is support level? Well, area, right? And it stopped right here. So if you scroll down, this is a new high in the MACD compared to right here. Compared to last previous bar, the previous red bar, this is a new high. So this is a momentum divergence. All right. I would be looking to buy calls into this weakness because there's strength here and weakness here. Momentum divergence. The momentum indicator saying up, but the bar is saying weakness. I'm going with the momentum. We're going with the momentum. So I'm placing my bets on it going up because that's what the momentum is saying it wants to do. I'm putting enough time on my contract and I'm taking it up to the next level. Where's the next level? Dot. Where's the next level? Well, if you drew it, you would know that the next level is 23.90 from here. This line that I drew here, the next level up is 23.90. So I would have did a nothing shorter than a 4-day expiration up to 2 weeks. And I would have picked a 23.50, $24 strike price. Lo and behold, look what it did. It bounced from 22 all the way up to 23.36 before actually it started before actually the next day it went all the way up to the level before it started playing around. And this is where you could have took profit and repositioned All right, took profit, waited for it to retrace. So let's show y'all how that would have happened. So this is the 19th. So let's drop down to our trading time frame. So boom. All right, bought weakness right here. Once it retraced, no, where we at? We up here. All right, so it went up. 19th, 19th, 19th. Boom. We took profit here. We waited for it to retrace. Right? It stopped at a support level. Right? And plus we have strength in the daily MACD. Remember? 19th, strength, weakness. That's what we're looking for in this 2-hour bar. We like, okay, here's the weakness. This is the 19th. Here's that weakness we're looking for. How far is it going to go down? We've seen it stop here. Boom. Once it turned green, this is where we make our call. Because we're looking for the weakness in that strength from the daily. Here it is. But we want to wait for it to stop falling. That's why we drop down to the 2-hour to see when it's going to switch over. Because we can't see all those bars in the daily. So this is where it's switched. This is where we do our calls. Right? And boom. The next day, 21st, I was actually in this. So the next day it dropped. It dropped down on me. So I didn't get scared because I knew that there's strength in the MACDs daily. And this holds precedent over my 2-hour. So I seen this strength, this momentum divergence, should I say. I wasn't scared because I knew that was going to be short-lived. The daily holds more weight than the 2-hour. So whatever's going on in the 2-hour is going to be short-lived. I'm just using this 2-hour to filter what I see in the daily. So I'm like, okay, drop if you want to, because now I can get those contracts cheaper. Now what I told you about retracement, now I get a lower price for it to go up from. Remember on the other side in the SPY, I was getting a higher price for it to fall from. On this side, I'm getting a lower price on the retracement to give it a lower place for it to rise from and a cheaper price. Because remember with calls, when the price goes down, the value of the contract goes down. Because with calls, the value goes up when the price goes up. So when you have a retracement, you can get those call contracts for a cheaper price because the price came down. So retracement, this is that weakness and the strength that I was looking for, right? Enter calls for the next level. Okay. So this is what I did. This is my play. This is what I've been doing. So today, yesterday was the 21st. So the 20th, what did I do? If y'all was tapped in yesterday, y'all know what I did. Y'all know what I did yesterday. I did exactly what I just explained to you. As a matter of fact, so I entered right here. It dropped. I added a contract, right? And before close, it came back up. So I was kind of in profit before the day closed out. But then Today it went crazy because it was doing what the daily said it was going to do, go up. So I'm buying all this weakness and waiting. This morning it went crazy. As you can see, look at all, this morning it went crazy. So I took profit, right? I took profit right there, waited for this weakness. Because look, we still got a new high in the MACD. So I'm taking it to the next level. Because it done broke through here. It done broke resistance. I believe it's slightly above resistance because let me make this screen bigger so we can all see it. Because look here, if this was the last resistance level, and because this is a 2 hour, so remember every time frame has their own resistance levels. But if I'm in the 2 hour, I can pretty much guesstimate what the half an hour levels are. You can see them. They're kind of the intermediate joints. That would possibly be the half an hour ones. So if this was a level that it just broke, because it's up here, only thing I could see it doing is retracing a tad before going to the next level, which is up here. Because it's right here already. It's right there already. See that? It done did its retracement thing. We still got a new high in the MACD. So if you were buying here, which I did, I took profit and waited for it to come down. And I bought back in. This is how you can you only need one stock, y'all. One stock. I done doubled this account. Playing one stock at a time. Matter of fact, let me show y'all what this joint looking like. So if y'all was tapped in yesterday, I told y'all I'm running this up to an M right before your eyes. So hopefully y'all following along and participating in the run up. So this is what it looks like. Let me see if I can find my positions. Show the positions. How do we show the chart? So distribution. So this is the small count challenge I've been telling y'all about. Started it with $100. And as y'all can see, this is what it looks like now. Doing exactly what I'm showing y'all in these videos. I'm not deviating. This is my strategy. And it works. So, like I said, it retraced. And you're not going to find perfect entry. You're going to get as perfect as you can, and you just got to live with that. So I got in, and it retraced a little bit more than I thought it was. It's okay. But this is why you need to not be over leveraged because, oh, here we go. Because if a stock is down and you're worried about the dollar amount that you're down, you won't be paying attention to what's developing in the price structure, in the price action, like the stuff that I'm showing you. You won't be paying attention to this stuff. You'll be worried about what the dollar amount you're down. And you mess around and sell for a loss. And then you turn around, end of the day, the play goes the way you thought it was going to go the whole time. But you keep doing that over and over again, you're going to incur more and more losses. So you don't over leverage and trust what you see, trust what you're learning and practiced. So I'm back in it and I'm running it. I'm running it up to the next level. I have, let me see, what's the strike price I have on it? Because I got in this at the end of the day after it retraced. Like I said, I showed you where I just got in at, right? So I got a $28 strike, 15 days out, something like that. So this is October 7th is the expiration date. So I'm gonna be holding this tops 8 days because we got to figure if it doesn't do what I think it's going to do tomorrow, I'll hold it over the weekend. So you always got to calculate those days in there too. So if I don't sell it tomorrow and profit, so that's day 1, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. So I got till next Friday to sell it for it to do what it needs to do, right? But it's probably going to do that way before, right? Because of what we see in the chart. So this is going to 1 million, y'all. Hopefully y'all paying attention. Hopefully y'all took my course as well. If not, feel free to hit the description. The link is in there. It's back on sale for $50 versus $9.97. So make sure you grab that before they all sell out. And also, if you haven't already, make sure you hit the like, subscribe, notification bell for these gems, man. Because I ain't got no crystal ball, but we doing what the charts say. It's Cheef and Chart, man. It's your man, Don Bucks. And remember, ain't no competition. You versus you. See y'all tomorrow.